Hey kids, Dean with Crypto the Wonder Dog. This is we're really close to this thing, man. If you haven't got your tickets yet, you better get online and get them. The North American Sports and Blockchain Show is coming up really soon, August 6th, 7th, and 8th. It's going to be at the JW Marriott, downtown LA, the LA Live next to the Staples Center. And this is the North American Sports and Blockchain. What a better place to have it than right across the street from the Staples Center, because that is the hub of sports in LA. If you're a Clippers fan, if you're a Lakers fan, if you're a hockey, a Kings fan, that's where they all play. That's where they go. That's where it happens, man. It's the magic spot. And we are going to be right across the street at the JW Marriott. And it's a beautiful building. Oh my God, that thing is phenomenal. Let me bring up a little something on our screen here that we like to call our website, North American Sports Blockchain. Right now we're 66 days away. Not much time. We're going to have a plethora of speakers. We are going to have a VIP welcome cocktail reception, that's understatement. Man, this thing is going to be off the chain, blockchain. And we're gonna have sports celebrities. We're gonna have people walking around. Bring your wife and your date, your husband, whatever. Have a good time. Have some cocktails on us and enjoy a night under the stars with some celebrities that you've watched on TV. Watch them break records. Watched them kick the winning goal. Watch them win the scoring, the final touchdown. Maybe even hit the home run that won the World Series. You never know, man. Be there. And if you are someone in space who is somewhat of a notable character, give us a ring, give us a call, talk to us. We would love to have you be part of this. We are accepting applications, if you will, for people to be speakers, guest appearance. Right now we've got a nice little bowl of pickings to pick from for our scheduled speakers, and a few just a dusting of what the sponsorship is going to be like. If you want to sponsor this event, we'd love to have you be part of it. It would be wonderful to see somebody's name up on this. We've got some people bidding right now for the title sponsorship, but we have a bunch of sponsorships available right now. If you want to jump onto the, I guess this would be the white paper, right? Our PDF that you can download. The North American Sports and Blockchain Conference, 2018, Los Angeles. Be there or be square. All right, so today's show is it's something that it sounds easy. It's wallets, and back in the day of the 80s, and you had your Velcro wallet, and you open it up to pay for your Big Mac or your Whopper sandwich, and you tell your girl, hey, it's on me, don't worry about it. And you open up that wallet, you pull out that crisp $5 bill. Well, those days are gone by the wayside, especially with the days of crypto. And what better authority on this whole space to talk about these things than everyone's buddy Christian from Sustany Capital. He was kind enough to sit down with us for a little bit and talk about the ins and outs of cryptocurrency exchanges, what they are, the difference between a few of them, why you need them, how they're important, how to keep them safe, and keep them from the prying eyes of the guys that want to just dip into the honeypot. And he'll explain all of that really in nice clear detail that most of us can understand. So sit back and enjoy this show with Christian from Sustany Capital on cryptocurrency exchanges. You guys ready to start the show? All right, let's start the show. audio checks. Did you did you go somewhere last week?
Did we go somewhere last week?
Did you go like to New York or somewhere? Did you have some big conference to go to, or did you guys pass?
Carl was in New York.
Oh, was he?
I stayed. Yeah.
Or
he went to that stupid consensus thing that everybody's complaining about.
Well, are they complaining about it?
Yes.
Really? What happened? What was it?
Quality was really low. They sold twice as many tickets as they should have for the venue. They sold 8,500 tickets to a venue that was suitable for maybe 4,500 people.
Oh my God.
So it took some people 3 hours to even get into the venue.
That's not good.
No.
Wow. Well, I hope the North American Sports and Blockchain has the same problem where we
No, you don't want
too
to
many tickets. Yeah. No, it'd be nice if we got into 4,000 area. That'd be nice.
Wow. And the hotel you chose is actually bigger than the Hilton downtown.
Is
in
it?
New York City. Yeah. It's probably
Really?
3 times the size. So
Oh my God.
you chose.
So we have the area for
yeah.
8,000 people.
You do, yeah.
That'd be great.
I've been there on a very large conference. There were at least 8,000 people.
Okay. Well, then there you go, people. Please tell your friends and neighbors. And then we checked out. What was that we went to? What was the name of that? The FFL or?
Oh, the Freedom Football League?
Freedom Football League.
I'm not sure we're allowed to talk about this on
we're
the
not.
air.
We're not. Oh, okay.
No, I
All
think
right.
there was a secret meeting.
Oh, it was a secret meeting. Okay, so we went
No,
to it.
you can't find anything online about it.
Really? Wow. Okay, so we'll take that out.
Yes.
We'll cut
We'll
this.
take it.
We'll
take
cut
it
that.
out. We take it.
So we went and hung out last weekend and had some fun. But you obviously have come up with something new, and we're going to be talking today about cryptocurrency exchanges. And I actually took one of the guys that we met last week. I took him the next couple of days later and helped him buy his first Bitcoin.
Okay.
Yeah, we walked through a whole thing on Coinbase.
That doesn't count.
It doesn't. That doesn't count. Well, you got to get in. You got to get in, right?
As of now, Coinbase is not an exchange.
Yeah, it's not
it will be.
Yeah, it's not an exchange, but at least he was able to get into and able to put some money, some cash in, and he was a little scared when it first started happening, but it all worked out. So he was pretty excited.
Okay, so you broke his cherry. Okay.
Yeah, that's exactly what we said. It's funny. So what do you got here? Cryptocurrency exchanges. Educate me.
Yeah, as you know, I only put this word on there for other people. I don't actually like the word cryptocurrency.
You hate that word?
I don't hate it, but it just doesn't describe everything that's being exchanged, right? So there's some cryptocurrencies on an exchange. There's a lot of virtual assets on the exchange. There's commodities on the exchange.
Mm-hmm.
There's all sorts of virtual goods on there that are not cryptocurrencies.
Virtual goods. Yeah, I know. We just kind of learned about virtual goods the other day, where you can make a baseball trading card now.
Yeah,
you can make a certain number of them and you can trade them. And we were talking about crypto kitties.
Can make kitties and doggies.
Yeah.
Yeah, but since everybody refers to it generally as cryptocurrency exchanges,
right,
we'll just call them that.
Okay. Very good.
I don't have a clicker. I have a clicker. All right, so let's first, as usual, define what we're talking about. Taxonomy, right?
Okay.
Taxonomy of exchange services. You got the low-hanging fruit that everybody knows your good old brokerage services, the guy you call. So he acts as your agent and typically will charge you a commission.
Okay.
You got trading platforms. They act as financial intermediaries, and you usually have to have a funded account. So that would be in the old world, you're Ameritrade, right? So
Ameritrade.
you put some cash into the account, and that cash then allows you to buy certain assets on that exchange. And then lastly, and that's what most people think of when they think of an exchange, specifically in this particular work. Well, those are technically order book exchanges, where you have a list of orders and you have a matching engine to match those orders with buy and sellers on the other end.
All right.
So starting from there, let's look at an order book. So everybody has seen it for once. So as you can see, you got all your orders on the left and all your sellers on the right, and the matching engine is trying to come up with your right price for your particular order. And we're going to go into the details of how it's going to come up with that particular price, because that's not always done the same way.
Yeah, I noticed that whenever I was going in, and the first time that I saw one of these on Binance.
Order books.
Oh my God, I was so
overwhelmed.
lost.
It's like so much information. Why is there so much information?
It was because there's a market price.
Yes.
And then what's the other one? Market price and what else?
Limit price, yeah.
Stop limit, right?
Yeah, if that's possible. Spots, yeah.
And I have no idea what any of that means, other than I kind of know what the market price means. Means that if you put in a number, or you don't put in a number, you just say, I'm going to sell 10 tokens of whatever.
At market, yeah.
And hit sell. It's sold for whatever the market is at that exact moment, right?
Yeah, that's the easiest. Typically, you can just hit the button, and it will give you the market price. It will fill it in automatically, depending on what exchange you're using.
Okay.
But
I typically use Binance.
Okay.
I don't think you're a big fan of Binance, right?
I don't discriminate
Okay.
against any particular one. I discriminate against all.
Okay.
So just some generics. We talked about this in the past, but right now most of the trading on exchanges is actually done internationally, mostly China, Hong Kong, South Korea. The US, as far as the exchange behavior is concerned, is actually very small in overall volume. It's usually around 10%, and then you get some smaller exchanges that are relevant in Denmark, UK, Japan. But what this doesn't necessarily reflect is the actual people that are trading, and there's a number of reasons for that that we I think go into later, but I can mention some now. So the one thing is the United States exchanges are fairly limited in the number of token pairs that they're offering. Most of them, and probably all of them, do a check for whether or not a token might be considered a security, and if so, won't list it.
Oh, really? Okay.
So that's why how you end up with very few token pairs on most of the US exchanges.
Yeah. Now, what is one of the US exchanges?
Gemini.
Yeah,
and they have a handful of tokens.
Do they?
So
okay.
yeah, those are the Winklevi that created that. So that was one of the first exchanges in the United States. The other one is Kraken.
I think that was one of the ones I tried to get into, and I couldn't figure it out it was back in December sometime.
Yeah, they're right now backlogged by about 4-6 weeks before they KYC you and let you trade.
Wow. Holy cow.
So which brings us to the topic of decentralized exchanges. So as I said, most of them right now are in China, and on the right side we're listing the fiat currencies. The reason why this is relevant is because there are exchanges where actually there's no reference to any fiat currency. So you can only participate if you already have a virtual currency or cryptocurrency, i.e. most of the time Ether.
Okay.
So what this does at the same time as far as specifically the United States is concerned, is you're not necessarily restricted by your KYC, AML, nor your clients' anti-money laundering procedures, because that's part of the old banking system.
Okay.
In a narrow sense. Well, we'll talk about this in a little more detail. So you got a couple of big exchanges in Hong Kong, South Korea, and lastly, that's the United States, is Bittrex, GDEX. So GDEX is going to become, I think they're going to call this Coinbase Pro. So they're going to
Coinbase Pro.
Yeah, so they're going to merge those two services, Coinbase and GDEX. So GDEX is owned by Coinbase.
Okay. And
then you got Poloniex in the United States. So we can jump over those guys in Europe. That's probably the most interesting part. What's traded right now is kind of mostly the known suspects. So what I mean by that is obviously mostly Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS, Litecoin, and those make up most of the trading volume. So mostly your protocol levels at this moment in time.
So the top 10 coins control 80% of the market cap.
Yes.
That's crazy. Wow.
Well, if we look at the next slide, it was obviously much more, right? So initially there was just Bitcoin, and then Ethereum came into the picture, Litecoin came into the picture. I hope I did this right chronologically. Then Bitcoin Cash, and so you see how the market overall was obviously dominated by Bitcoin initially, and now it's down to like a third of the market on average.
Wow.
And yeah, that will probably go up a little again.
Will it? Okay.
Yeah, once a lot of the altcoins that are just based on ERC20 will wash out, you will see that retract.
Wow. Okay.
Again. So trading pairs. Not all cryptos are listed on every exchange. So specifically in the United States, often very, very limited. So the largest exchanges will list a couple of hundreds, and there's no exchange that will list everything that you can find on CoinMarketCap. I forgot to look what it is today, but it's a few thousand, obviously.
Wow, that would be crazy.
So they're not automatically listed. And specifically, some of the top 20 exchanges in terms of volume now charge pretty high fees to actually get listed.
Why do they charge fees to be listed?
Well, A, because they can.
Okay.
And B, because they actually do a couple of checks, right? So they want to see whether or not there's going to be volume.
Yeah.
Whether or not these are actual operators, so to speak. Yeah, I mean, there's often scenarios to where, think about it, if it's a truly decentralized system, who was going to list it? You don't have a driving entity behind it, so would actually the exchange be that needs to decide? Like in the case of Bitcoin, the exchange decided, oh, we're trading Bitcoin, right?
Okay.
Because obviously there's no Bitcoin company, no Bitcoin Inc. that said, hey, we got 100,000 Bitcoin we'd like to sell on that exchange. Someone has to start someplace. But now, in order for most coins to get any kind of liquidity, they somehow need to be on the top 20 exchanges.
Okay.
And so they have a lot of tokens to choose from, and they want to make sure that these tokens are actually finding buyers.
Okay. Now,
not just listed.
we're always talking about the coins that cannot be released in the U.S., that shouldn't be released or whatever, or started, right? If a company does an ICO, they can't do that in the U.S. Are there any coins in the U.S. that are listed on exchanges?
On U.S. exchanges?
Or just any, like Binance or, any of the top 10?
Sure.
Yeah? Okay.
Yeah.
All right.
The U.S. is kind of very insular in that sense.
All right.
I mean, U.S.
You
doesn't
just can't. You can't be part of the
markets.
ICO, right? You can't be part of.
Sure. Yeah. I mean, you can buy EOS from most exchanges right now.
Okay. All right.
Right, and they excluded every U.S. buyers.
They did. Okay.
Yes.
All right.
And you should. Today's the last day
What?
to buy EOS.
It is?
They're going to, the last day in the sense of they're coming off testnet tomorrow.
Really? What's it going for right now?
$12?
$12. Is that good?
Depends on,
I mean, is it? What do you think is going to happen tomorrow?
Well, the interesting thing is, so the first thing that's going to happen is if you registered your EOS, you're going to get Wikipedia coins.
Get what?
As an airdrop. So because part of the model of EOS is they have their own venture fund, they're funding projects on top of EOS.
Okay.
So those projects, you get a coin in the equivalent that you're holding EOS coins as an airdrop. So EOS, or Block One more specifically, funded the Wikipedia project. You talk to Sam. If not, make an introduction. You should have him on the show.
Yeah.
And because of that, so they gave him $30 million, the equivalent of $30 million. And so because of that, everybody who is holding EOS in June is going to get an airdrop of Wikipedia coins.
Oh my God.
And this is going to happen with other projects that are being funded.
Yeah.
from the US venture fund.
How crazy. Man, that would be awesome.
Yeah, makes total sense, right?
Yeah.
So they raised more than $4 billion now.
$4 billion.
$4 billion,
Oh
the equivalent of $4 billion. As you know, I don't really like using like these US dollar numbers since they never make any sense. Because obviously, well, I shouldn't say obviously, but it's not very likely that they actually got US dollars from anybody, right? They got Ether or Bitcoin, but mostly Ether.
Wow.
So depending on
crazy.
Whether or not they're going to sit on all of that Ether. What's not clear, and then we should drop this topic and probably have a separate talk about this, is what's going to happen once you exchange your ERC20 placeholder token for your actual EOS. Because if you bought EOS, you actually got an ERC20 token, but that's going to change tomorrow.
Wow. Yeah.
But the question is, what's going to happen with that ERC20?
Mm-hmm.
Are you just keeping that? And also, again, that part I haven't gotten around to research.
No. All right.
I'll write about it. Anyhow, back to exchanges.
All right.
So not all exchanges accept fiat currencies. The smart ones don't. And U.S. exchanges typically don't list security tokens. They have their own checklists of, similar to what we talked about, the Howey test and whatnot, whether or not something might be considered a security by the Securities and Exchange Commission. And if it somehow falls near that spectrum, they won't list it.
Wow.
They err on the side of caution.
Okay.
What do we got? Yeah, you need to push that. It's not working again. Yeah, I'm gonna look at your thing. Oh, KYC AML, that's where we are? Okay. Yeah, so, and this leads into this because of the fiat, because if you have a fiat connection, then you pretty much automatically have to adopt know your client and anti-money laundering procedures. And anti-money laundering is not always clearly defined all over. It's basically, in the United States, the guidance says if there's a suspicious transaction, and you know the fact that if you deposit more than $10,000 in your account, then your bank will report that as a suspicious transaction. So suspicious $10,000. So that was defined by the U.S. Patriot Act, and so that they are different standards around the world to what a suspicious transaction is, obviously. Yeah. But KYC, you've probably gone through one or more of those where you either upload your passport or your driver's license.
Yeah, that's what I had to do. I had to take a picture of my driver's license and then a picture of me holding it.
Right.
Yeah, and then a utility bill.
Yeah.
Yeah, it was a big
so
thing.
Those are requirements typically for financial services business. Yeah. And so they are now being applied often, but not always, to exchanges. So in the United States, that's always, but not always at the beginning. Could be at a later point in time when you're starting to either trying to withdraw funds and or reach a certain threshold. Okay. But other exchanges around the world, they might have this as an option, but not as a requirement.
Okay.
So again, that comes back to the fact that even if you're a U.S. trader, you might not, and most likely don't, use a U.S. exchange, actually.
Yeah.
I'd be surprised if a lot of individuals that do this semi-professional would actually use any of the U.S. exchanges at this point in time. Mostly we'll get to that because of their strange reporting practices.
Yeah.
We're all the way back here.
Go forward. There we go.
All right. Spoofing and wash trading. So in case you are spoofing. So spoofing is when you create a false buy order and to attract traders. So mostly what you're actually doing, you're probably mostly attracting bots. So you're trying to figure out trading behavior before you do the actual trade.
Really? How do you do that?
You just put in a buy order and just immediately withdraw it. But because it's bot reacting to it, it's instant. You get an instant feedback mechanism.
Oh, really? So if I wanted to price something to go up,
yes,
I would sit there and put a buy-in for a bunch and then
Yes.
cancel it.
Yes.
Put a buy-in for a bunch and cancel it.
Yes.
Really?
And immediately, yeah.
And what about, does it go the other way in reverse, like selling?
Yeah, of course.
Okay.
And so the other one, and that's mostly done by, or I shouldn't say mostly, but it's done by the exchanges as the simultaneous selling and buying, which is called wash trading. So that's either done by the exchange to make it look more relevant, like, hey, we have a lot of action, or it could also be done by a particular coin.
Wow.
And so I'll see this pretty frequently where all of a sudden XYZ coin shows up as the number 2, 3 coin in the exchange that I happen to be using, where you typically would see the usual suspects. So you would see Bitcoin, Ether, Ripple, and so forth. And all of a sudden there's the XYZ coin. And you have never heard of it, never heard of the ICO. So that could often be a sign that someone's doing wash trading. So when, like everybody else, I'm always curious. So like, well, what is that? Why did this never show up for me before? So you're going to look at it, right?
Yeah, that's right.
Make it interesting. And so,
is this highly illegal?
Oh yeah, that's why the Department of Justice logo is on that particular slide, because they are currently investigating some of those happenings in the U.S. exchanges.
And which is encouraging, like a pump and dump, right? Where people try to get into it. You're looking like people are buying it, so their price goes up, and then they dump it.
Right, and it's been suspected that there has been a lot of that going on over the past year. So this is more detail, and that's a story that has been widely told and reported. So initially, when Coinbase was one of the very few options to buy cryptocurrencies, the IRS issued a subpoena, what's called a, I think, John Doe subpoena, where they asked, hey, send us all your records, because the year before, the IRS had issued a guidance to where Bitcoin specifically, but virtual currencies in general, are to be considered property and have be, as such, a subject to property taxes. And so the following year, the IRS got, I forgot, like 400 or 500 tax reports actually mentioning any type of virtual currency transactions in the United States. And then they compared this with Coinbase's subscriber numbers, which were already past 1 million. So they figured there was a slight discrepancy. And so they issued a John Doe subpoena to Coinbase asking, hey, send us all your client records and all their trading records. Coinbase refused, and they eventually settled where Coinbase sent over all client records for anybody that had traded more than $20,000 in that previous tax year.
Oh, okay.
And I think that's kind of their practice now, whereas the problem with this is, according to people that have interfaced with Coinbase in this particular matter, that Coinbase trades anything that's leaving its system as a trade. But as you know, if you have, let's say, 10 Bitcoin in your Coinbase account and you transfer this to your wallet, you didn't trade it, right? You just transferred it to your wallet. But Coinbase will trade, again, according to people that I talked to, will treat this as a trade.
So you got to pay taxes on what you're just moving.
Well, you have to correct this, because they send out a 1099 to the IRS and to you, reporting this as a trade where you sold 10 Bitcoin.
Oh my God.
So imagine you sold 10 Bitcoin at $18,000.
Holy cow.
So they're going to ask you to pay taxes on $180,000. However, you never made this $180,000. So, and as usual, if you're dealing with the government, it's up to you to prove that this isn't so.
Wow.
And specifically in this case, when Coinbase kind of provided supporting evidence to the contrary.
Okay, good.
It's something that they should fix immediately, should have fixed before they ever did anything.
It messed up a lot of people.
I mean, the obvious thing would be that if you, that's kind of the problem with Coinbase, particularly in your anecdote earlier, when someone was initially buying his or her first Bitcoin, so you connect your bank account or credit card, I think, to that particular app, and then you buy your first Bitcoin. Okay, that's all fine and good. Now you have a credit card record or an account record that you bought this. It's different with most exchanges to where oftentimes you will just transfer Ether in to then buy another currency, right? So this Ether comes from any wallet address for whatever reason, right? Doesn't have to be yours. Could be a payment for something. So
if you're buying something that you know that's depreciable,
right? There is no rhyme or reason that any of the exchanges could make up, unless you willfully report something. You say, okay, this particular address is my hard wallet, and I transfer it in and out. So that's probably the most often seen use case at this moment in time that they at least should support, which would probably catch more than 50% of all happenings, right? Because most likely you have one cold wallet that you use to trade, and then you pull it back into that cold wallet ideally if you want to be safe. And so if they just accounted for that, a lot of these errors wouldn't happen. Anyway, so exchanges in general are actually not the most interesting thing for me to talk about. What's more interesting is, as usual, is the protocol level. So they are specifically the 0x protocol, which is a protocol that will let you build exchanges.
Build exchanges. So you can build your own exchange.
Yes, anybody.
Really?
Well, anybody with enough coding skills can do so. And so we list a couple of logos on here already, and there's prediction markets that you can build on top of that, and IDEX and some of the other decentralized exchanges are using that particular protocol. There's very little volume on those at the moment, but that will hopefully change, because the obvious one being is these are more efficient, less stringent KYC requirement, meaning none,
just
and usually less or no fees.
Wow.
And so centralized exchanges are something that is obviously entirely atypical to what blockchain is all about, right? Blockchain is all about decentralization. So we would expect to see more of these with more relevant volumes sooner or later. So, but for the time being, as long as 99% of the world still hasn't interacted with any exchanges, okay, well, they'll try to make it easy, and you pay for the convenience in essence, right?
Okay.
So since specifically decentralized exchanges don't have any interface with banking world, so you can't just take your credit card, you can't just take your bank account and use fiat to buy any of the coins, right? So that means if you want to stay within that ecosystem, some clever people came up with this model of stable coins, and we have a couple of those. So a stable coin will tether, and one of them is actually tether on the left, will specifically hinge itself to a particular value, i.e. most often the US dollar. So one tether, one stable coin of any number, of any name, is always going to resemble more or less $1.
Okay.
So what it does in this particular scenario is you can leave it on the exchange, and it's not subject to the volatility, and it's not subject to all the fees that you would incur if you constantly transfer things in and out, in case you're transferring a lot of tokens on a daily basis.
Okay.
So now what we're starting to see, we've been looking at those for a while, and most of them are still in the alpha stages, are trading terminals. So the most well-known trading terminal from the old world is obviously your Bloomberg terminal that everybody was paying for a lot of money. Some people still are for no particular reason. And so what they do, they will connect to many exchanges, although again the couple that we are researching right now, they're still very limited in the number of exchanges they connect to. And so there's two main models that they connect to: sockets and API. Sockets is basically, it's streaming constantly. Okay. So it's constantly updating, whereas an API, you actually have to file a request. It's just a technical difference. So not all the exchanges are necessarily offering at this moment in time this kind of socket service. I mean, it's obviously very taxing on their system if you have to provide and broadcast this particular information to your particular computer at any given point in time in real time. But that's what you need, obviously, if you're a professional trader, specifically if you want to go into high frequency trading. And so everybody who hasn't read this book in the past, it's a really good read. Michael Lewis's Flash Boys, read it 3 times by now. So this talks specifically about high frequency trading. And so to people that are listening and have never heard this, the vast majority of all stocks on the old stock exchanges, on traditional stock exchanges, are traded in nanoseconds by bots. So I just looked up the last number that was available online to me. Was already past 83% back 10 years ago. In
83%
of daily volume. Yeah.
Wow.
So I would assume it's way past 90% at this moment in time.
Oh my God! Wow.
So there is some of this already going on in the crypto world.
Yeah.
Probably not as much, again, based on the limitations that the exchanges have at the moment.
Yeah.
We're looking into that. So trading bots, there's actually a couple that you can just pick up basically from GitHub and modify to your likings. There are a couple of platforms as well where you can build your own trading bots and algorithms.
You can make your own trading bot.
Yes.
Wow. Well, that's interesting because I did get Crypto Hopper, and that was one of the ones that I got into. I linked it to my Binance account. And I saw a ton of trades starting off. Like it started trading stuff, and then you could. It's way above my technical level. It's, just getting in and not having any training.
Right.
Just trying to figure out what was going on, because I thought it was just something you give your money to it and it figures it out on its own.
No, you still have to train it.
It doesn't do that.
You still have to pick a model, right? So
yes, you have to install certain. I forget what they were called.
Well, you always start out with just picking a model, because all of them come back to the kind of the same idea. It's always kind of a risk and rewards difference, right? That comes back to what modern portfolio theory does. Like the higher risks typically have the higher rewards, right? But you want to pitch those against each other, and ideally have a portfolio where you cannot just wipe out, where the ones with the high gains are offset with those that are more stable, and vice versa. They're antagonists to each other. Okay. I.e., if you want to make a simple example, you could buy carbon offsets of sorts and then run a refinery. Right? So that's kind of the same model.
Is it? Okay.
We got a couple of futures listed right now. So the Chicago Mercantile Exchange started listing Bitcoin futures back in, I think, October of last year. The ICE, Intercontinental Exchange, is working on its Bitcoin futures right now. And there are smaller commodity exchanges that list Bitcoin futures. And supposedly they're also talking about listing Ethereum sometime soon.
Really? So they're only listing Bitcoin right now?
At the moment, CME is only listing Bitcoin futures, yeah.
And how do you think that happened? Because it seemed like a year ago it wasn't. It was what, $5,000 around October, right?
In October, yeah, that sounds about right. Might be closer to 8. It was like 10, 20, 17 at the end. So
yeah. So, and at the time, was it? Even people like J.P. Morgan and stuff, and they were saying, no, we'll never advise our clients to buy this, and
then they bought it,
and then we're telling everyone to buy it.
Yeah, I don't know. I'm not a big fan of derivatives overall, because the principle here is you don't ever get to actually hold the virtual asset.
Okay,
right? It's just the right to hold it.
Okay.
And so that simply doesn't resonate with me. That's kind of part of the old world model, and I don't think it's going to last. It's
Really?
going to get a couple of people into the market. It's going to make it more stable. It lets you hedge, obviously, in a certain way, but I don't see this expand over this quote-unquote asset class altogether. And again, this always comes back to the idea of people calling this realm an asset class. It's not an asset class. It's a technology. So you got to look at the different segments within those tokens, what they're actually doing, and where they are in the development cycle, etc. To look at all of those as an asset class just makes very little sense. It's kind of the old paradigm. If you want to trade larger blocks, you'll, as usual, would turn to an OTC, so an over-the-counter trader. There's very, very few, and they have all different requirements. Oftentimes, they will only take you on if you have at least certain minimums to trade, because otherwise it's not worth their time. Most of the time, they make money on the spread, so they don't have a fee, and we'll talk about fees in a little bit, but so it wouldn't make any sense for them to take less than $75,000, oftentimes $100,000 to trade with. And when I say dollars, that's obviously most of the time it's the equivalent of Bitcoin or Ether and a few other currencies. So, and again, here, like same with the US exchanges, they only take a few of the top currencies at the moment. Because there's not enough liquidity for most of the altcoins. They will typically make you jump through a couple of hoops. They want to know who you are, and they want to know where these funds are coming from or these virtual currencies are coming from. And so the procedure's a little funny right now. Most of the time it's like a Skype call with your trader. Wants to look you in the eyes like, how much do you want? Is that you? That wants to place this order.
All right.
Security and custody. I think I have a honeypot slide later, but most of the time exchanges now get smart enough to keep more than 90% of the private keys in storage, because as we talked about, there's always this incorrect language that people use that say there's XYZ bitcoins in there. Obviously, that's not how this works at all, right? It's just that they have access to your private keys. If they are still on the exchange, quote unquote.
Okay.
Most of them now provide multi-signature support, so that doesn't only work on the actual login, but typically will go down to every trade that you're doing. And then just look on your phone and use Google Authenticate or something to that extent. And there's obviously more security that they are employing, but that's not across the board. The one that you will most always see is you go into your browser, if that's how the way you're accessing your exchange, and you'll see these little dancing dots. So that's the DDoS protection, so the denial of service protection.
Okay.
So I assume you're familiar with that, but that's the idea that you could fairly easily overwhelm any type of service by just sending them 1 million requests every second, and they wouldn't be equipped to answer all those requests, and no one would get an answer anymore trying to access the site.
Is that kind of like the authenticator?
That's the authenticator that you're looking at, yes.
So it's crazy that you have a number here that you click on there, and it says, put in this number, and then boom, and it regenerates new numbers all the time.
Yes.
That it's on your phone, and it's just...
you need to tether to your phone once. So as you know, every number or every one of those is tethered to a particular service.
I've got like Amazon, Bitcoin, Binance, KuCoin, Coin Exchange. So these are, when I do that, So what do you call that? Is there only one of these types of things, or are there multiple?
This, I think you're using Google Authenticator, but
Authenticator,
you can. I mean, that's open source stuff. That's OAuth, so you can build those.
Oh, you can. Okay. Wow.
So there's many of these, but Google Authenticator is probably the most used one that's typically referred to. So that's something interesting that I only dove in as of late, because it comes back to eventually you might need to report Are we recording still?
Yeah.
Then you might eventually need to report your trade to a tax authority. And so there's all these little fees that are kind of hard to keep track of. So if, like a good virtual asset citizen, you store your virtual asset on some form of a cold wallet, then first of all, depending on what exchange you're interacting with, in this example, let's assume we're interacting with a decentralized exchange like an IDEX, you need to first move it into a hot wallet. And so that's why we have our little MetaMask Fox there. So you move it there, and you'll typically have a small transaction fee for doing that. So for your Ether, for example, so you have to pay some gas for doing that.
Gas, yes.
Yeah. Then depending on the exchange, sometimes there's even a fee for depositing a virtual asset in the exchange.
Really?
Well, because here's what's happening. Because if the exchange is a custodian, then there's custody fees attached to that, and there's only very few custody services at this moment in time. So if, as an exchange, I hold an aggregate of $1 billion in virtual asset, that's a big liability. So a custody service might charge as much as 0.1% per month to basically insure you against you losing that. So they take over that custody risk.
Oh, okay. So in case you lose your
So hence, some exchanges, if you just move the funds in, will charge you a small fee for that, and sometimes it's limited to certain currencies where they do this. I think oftentimes, if that's the case, then it's Bitcoin that they will actually charge you something for it.
Mm-hmm. Wow.
So then the obvious one is, so now you got your funds finally in the exchange and you want to trade it against something. There's a fee attached to that, and that's that particular fee is somewhat opaque. On average, it's probably safe to say it's 0.1% for the seller, 0.1% for the buyer.
Okay.
However, there's some exchanges employ a sliding scale to where it decreases if you're trading more.
Mm-hmm.
So if you're trading more in volume. And sometimes, again, that's something that we're still researching, to be honest. It also seems to be that they're actually making money on the spread as well.
Really?
So just to explain it real quick, so if you wanted to sell XYZ token for 10 Ether,
mm-hmm.
and so you're selling 100 XYZ tokens for 10 Ether, and that's your minimum price, but someone else is willing to pay 12, then the exchange might charge you a 0.1 and then also just keep the spread. Why wouldn't they?
Wow.
And again, I'm not trying to generalize here, but there's honestly no good data to be had. So I did a couple of exports on a couple of the little trades that I did to poke at some of the details and run the numbers again. It's still not clear. What is clear that it's not, even if the exchange is advertising that, it's not exactly 0.1%. So again, it's a problem when you need to do accurate reporting. It's not a problem to you in person if you're doing a couple $100. If you're doing a couple $100,000 and you're doing this on a daily basis for a year, it makes a difference.
A lot of fees, man.
It makes a difference. So,
and the exchanges are making a lot of money then.
That too, but again, it comes down to you want your recording to be accurate, right? So then when you withdraw, there's also obviously your withdrawal fee again. So in this particular scenario, you could have basically one transaction and 5 fees.
5 fees.
Well,
wow.
And so to make this more complicated, those fees could be all in a different currency.
Really?
Yeah. So you're buying one particular coin or token, and you'll either see that this is 0.1% of that token, or it might be 0.1% of ETH.
Wow. And they just make up their own rules, really.
Yeah, you need to pay attention to that, how they implement it.
Wow.
Right.
Okay. And they have to explain. I mean, they have to tell you the stuff up front, don't they?
Again, depends on the regulation. Yeah, so there's probably something to that extent in whatever user agreement you agree to when you registered for that exchange. But I think it's more a matter of the actual implementation. This comes back to the fact that even the quote-unquote regulated exchanges in the United States don't even get this right at this moment in time, and that you also don't at the moment. Again, that's subject to more research, but oftentimes you don't get that level of detail from that export.
Yeah.
I.e., what I'd like to see if I do my export is like how much did I bid, how much did it execute at. But you typically won't see what you bid on your export.
Oh, really? Okay.
Does it make sense? So you don't know if you necessarily whether or not you made money, you lost money on the spread.
Wow. Yeah, this is good to know these things going into doing more trading in the future.
Yeah.
My God.
Again, I mean, the speculating is the number one utility right now of cryptocurrency, so that's why we're talking about this. Eventually, this is going to change. This is one of those sliding scales.
Okay.
That's Polyonics. That's an ES exchange as an example. So you see the fees are quite substantial. So that's why if you do this semi-professionally, you want to know those particular scales because it's going to affect your particular trading behavior. So you just want to do larger amounts, and or you might want to employ a professional to do this. So everybody probably has heard at this point in time of the original exchange hack, Mt. Gox, which was mostly self-inflicted.
Really?
But at the time, they lost 473 million, and at the time, Bitcoin was at around $100.
Oh.
Or 115 bucks. So if you multiply this with today's price.
Oh my God. Wow.
It'd be a couple billion. Yeah. So then Bitfinex got hacked, lost a couple million, 56, not a couple. And Coincheck was widely propagated.
530 million.
Yeah, and Coincheck actually reimbursed all the clients that lost it.
They did?
They did.
How do they do that?
They had the money on hand. In the meantime, they got sold.
Oh my God.
Yeah. So
are they still around, Coincheck?
Yeah. Well, they got sold. They got bought by someone. Hence, everybody in the industry is typically referring to these type of centralized exchanges as honeypots because there's a high concentration of virtual assets to be had. So they are the number one target online outside of wallets in the space. Reporting, again, even if you just have an account and you have more than $10,000, and again here, it's still the question whether or not your exchange account is an account in the sense of US law, but you might have to report it if you have more than XYZ money in there. In the United States, that's $10,000. So even if you just have the account, or if you're just a sign on the account, so to speak, see your tax professional and legal professional for details on that. Just something to be aware of. So I put a checklist together at the end of the day. So a lot of exchanges might have geo restrictions. So you might have to deploy a VPN if you want to access a certain exchange. You want to figure out ahead of time before you sign up for an exchange if you are in need to add your bank account to this exchange. Do they work with banks, and or what banks are they working with? There's a limited number of them at the moment. You want to, needless to say, figure out what's the trading volume, is there liquidity for the type of pairs that you're looking for. So you want to research a lot of stuff ahead of time. What are the verification requirements? Initially, there was not initially, but still there's a lot of backlog, simply because those KYC methods, they are still lagging a lot of detailed data at the moment. So it's
whenever I was the first time that I went and bought some Bitcoin, the first time I bought it, it was fine. Like my bank card went through the first time.
Sure.
The second time it didn't let me.
Mm-hmm.
And I had to call the bank to let them know I was doing this.
Mm-hmm.
The same thing as I have a PayPal debit card.
Right.
And I had, every time I buy with my PayPal or credit card, I have to call PayPal to let them know I'm about to do it.
Yeah.
And when I did this with that guy last week, when I showed him how to buy his money, when he hit buy, it was declined.
Mm-hmm.
So he had to call his bank, let him know. He hit it, boom, and it went through.
Yeah, and that comes back to the banking relationships.
Yeah.
So when we start,
Are they all on the radar on this?
So no, it's more like, so let me give you an example. That was like 2-3 years ago. So I bought something on exchange and never got transacted on, never got any fraud alert, nothing. Found out later that, well, they were using a bank in the UK to charge my account. And one of the fraud prevention methods of my banks is just to see, because it's in the United States, there's a charge in the UK. Well, we're just going to decline that. And as a courtesy to your client, we also blocked your card entirely.
Oh my God.
So that happened like half a dozen times.
Oh my God.
Until I couldn't convince the bank to change their security procedures, so I just had to
Change banks?
No, change exchanges.
Oh, okay. All right.
With a different bank. So that happened multiple times. So that happened with banks in the UK, happened with banks in Estonia. And yeah, so now it's no longer that much of a problem. But again, there was kind of a period of try and error there for some time.
All right.
We talked about fees a bunch, and then the obvious one, exchange rates, and that's always an interesting topic, specifically if you're dealing with banks and different currencies, because they make up their own exchange rates.
Mm-hmm. Yep, they do.
That's where they make most of the money. Anyway, so that's it on exchanges.
That's it. All right. Well, that's great information, because there's a lot of people who are not getting enough information on exchanges, and there's just not enough out there when people are just getting in, because there's still not that whole how to buy Bitcoin 101 yet, really, and break it down into things like this just for exchanges is great.
Yeah, and what's important to remember is, like, again, when you're going to Coinbase, it's not an exchange.
Yes.
Right? It's very expensive. It's you're already down 3% before you even start.
Yeah. You put in $100 and you get $96.
Yeah, and so by the time you transfer this to an actual exchange, you got another transfer fee and so forth. So so there need to be easier ways.
There really does,
specifically in the United States. I mean, we are supposed to be on the forefront of this, but we are far behind. And at the end of the day, again, it comes back to the fact that the exchanges that are relevant right now, I'm not convinced that they're going to be relevant within a few years. Yeah. Because, again, they're all rent-seeking at the moment. They're all making money on fees, the basis fees, almost all of them.
And just raking in the money.
Oh, yeah, it's very profitable. very profitable. So at the end of the day, this should go the way of blockchain. It should be decentralized. And what we'll see is those will be functions that will be built into your wallet. Again, it comes down to, right now, main utility is speculation.
Yep. Well, all right. Well, thank you so much for the education. We'll look forward to the next time.
Yeah. Should we talk about ICOs?
I think we should.
Next time? Yeah.
I think we should.
Okay.
That's a big...
Like the myth of how you do ICOs.
Yes, because you have a very strong opinion on ICOs and keeping people legal and keeping them out of the U.S. to begin with.
Exactly.
Yep. All right. Let's do it.